Hello and welcome to Alpha Uncovered, where we talk about the most interesting and influential people in the world of alternative investments. Today, we have a very special guest who is not only a director at RCM Alternatives, but also a leading expert on China, who's been running global CTA strategies for the better part of the last 5 years. He's none other than Matt Bradbard, the man who knows everything about commodities, managed futures, and moonlights every Wednesday night doing impersonations of Bradley Cooper. Matt, thank you for joining us today, and it's good to see you.
Yes. Good evening to people in the States. Good morning to people in the East. That's glad to be here. Thanks for having me.
Yeah, so why don't we talk a little bit about what you do, maybe for the audience, just to let them know. We're working on a project together, which is to build the first QFI platform, which will allow offshore investors direct access to onshore China markets through a regulated qualified foreign investor license here in Hong Kong. There's a lot to unpack here. The big one, of course, the elephant in the room is why China, why now? While we get into that question, why don't you tell us a little bit about your firm, where you guys are coming from, and then we'll get into the China discussion.
Yeah, thanks. For the better part of 2 decades, about 22 years, I've been in the commodities space. I don't really know what else to do. Right out of college, I got into commodities, and I've sat in a couple different chairs over my tenure. I formerly ran a small CTA trading just U.S. futures and options. I also ran my own introducing brokerage firm that RCM acquired. God, not to date myself, 12, 13 years ago. But yeah, I've been in the space in commodities, predominantly on the sell side. And really, in my world in the US, we have 2 sides of the house. We deal with traders. So by traders, I mean ETF manager, a mutual fund manager, a hedge fund manager, perhaps a grain elevator, a feedlot operator that is coming to us for a variety of different reasons, whether that be clearing, execution, helping structure an entity, negotiate deal, commercial terms. There's a variety of different bespoke services that we try to roll out the carpet to these traders.
I understand that your team works a lot on SMAs, more so than on fund products, right? And so what type of clients are you working with that prefer SMAs over funds?
Yeah, so the other side of our house is investors. When I say investors, it could be a family office, a high net worth investor, a pension endowment. They come to us for similar reasons that the traders come, for multiple clearing relationships, multiple execution relationships, 24-hour execution desk, and then similar connecting the mandates. If there's a certain investor that's looking for an agriculture trader, an energy trader, we help connect those dots. To answer your question about whether an investor is looking for a fund, whether they're looking for a separately managed account, it really boils down to their risk tolerance and what they're looking for, and access, really. More often than not, an investment into a fund may have a lower minimum. If you're accessing some of these global macro managers that are established that may manage $1 billion plus, a minimum SMA may be $10 million, $20 million. You can control your own leverage with an SMA. If you want to leverage your own balance sheet, you may be able to negotiate fees from a management fee or incentive fee perspective with a separately managed account versus investing into a fund. There's pros and cons. They're taxed differently. Different managers or emerging managers may only be accessible via a separately managed account. More established managers that have been around for an extended period may have different access options. It really depends what the investor is looking for. We work at RCM with both investors and traders that have fund vehicles, access SMAs, the full gamut. I don't want to be vague. When somebody asks me, what's your typical client? It could be a $1 billion 40-act mutual fund that's looking for redundancy, or it could be your single mom and pop that have 250,000 that they're looking to speculate with and find an energy or volatility trader. So it's really both ends of the spectrum.
What I find fascinating is that your house or your team's specialty in mostly alternatives, but definitely a big focus on commodities. And here we are where the geopolitics on US and China have been really quite challenging for investors looking to access the space. Most IC members or most IC committees from larger allocators will defer to being more conservative and have been standing on the sidelines, but numbers are starting to look pretty good in China. The macro numbers are recovering, savings rates are coming down, equity markets are bottoming out, which a lot of our managers are starting to see as well. For the last 4 years, though, last 5 years, you've been focusing a lot on building in China. Why don't you tell us about how you first got into China and more specifically why the commodities space in China?
Yeah, certainly. It's been an interesting journey. We started exploring China in 2017. And when I say exploring, we hired one individual who was a Chinese national that got his undergrad and master's over here and said, we want to be doing business in China. I didn't know exactly what that meant. There's certainly a lot of wealth in that region of the world. My naive self thought it was just an asset grab and getting capital from that region and deploying it in US, Europe, in our traditional managed futures business that we do for global clients. But as you dig into that, there's capital constraints, getting money in, getting money out. So we did recognize that there was an opportunity. There's very deep futures markets, 5 of them or thereabouts, that are massive. They're liquid. There are certainly nuances when you're exploring what the opportunity is in China, but we did recognize that there were some commodity markets in China that traded nowhere else on the globe. That had our attention.
Like, give me an example. When you say nowhere else on the globe, that's pretty compelling, right? Because now we're talking about literally untapped asset classes. So what can you trade in China that you can't trade in?
Alpha that's non-correlated to the rest of your book. So markets like juju beans, flat glass, urea, PTA. I don't even know what some of these markets are, but they're super liquid. And there's an opportunity where there's directional volatility and there's trends. We knew there was an appetite from an investor standpoint and a trader standpoint to access China. So we took a trip in late 2017, really looking to meet with clearing firms, exchanges, investors, and people that live in China to just survey the marketplace to see what is the opportunity. And our takeaway was there's a lot of capital in China that can't leave China. And there's markets that are tradable in China based on RCM's expertise, dealing with alpha providers that have had some success ex-China, trading futures in Europe, trading futures in the US, have a robust infrastructure. If we could get market data, provide that to these systematic managers to see if there was an opportunity set to trade their identical models that have yielded returns out of China. Let's do an experiment here. We're going to give you market data, run it through the gauntlet, see if we have anything. Lo and behold, we took this probably over the course of a year to about 50, 60 different managers globally. Some of them said models don't work. Others said this is too good to be true. Others said, yeah, I don't believe the numbers. The market's not efficient. A lot of reasons why not to do business in China. Fortunately, we convinced a couple managers that an opportunity existed.
So what are we talking about? The range here. I'm curious because some models didn't quite work. Good number of the managers, otherwise you wouldn't be in this space. A good number of the managers actually outperformed. So I guess the first question is, how much outperformance are we talking about? And using the identical strategy. And then, we'll talk about the types of strategies that you're seeing work.
So historically, let's say you're able to maintain a 1 Sharpe in the United States, Europe. That's commendable. So you're not the best trader. You're not a high frequency prop shop that's spitting out a 5 Sharpe, but an investor is going to take your phone call if they know somebody's on the other end of the phone that has a 1 Sharpe and has for the last 1 to 2 years. That's kind of the floor in the US where you got my attention. In China, I think that's a 2 Sharpe. So I'm not saying you plug and play. There's some nuances and maybe you have to increase your trade duration. Maybe you have to shorten your trade duration. Maybe Historically, your alpha has come from fixed income financial indices and currencies. You're typically not trading a ton of those, or at least my experience, you're not trading there's no currency market to trade in the futures. There's 4 financial indices and there's 3 fixed income markets. So a majority of the market signal providers that RCM has worked with that we have helped trade China aren't trading those markets. They're trading commodities. My stance is if I can get a hypothetical back test that is 1.25, 1.5, or 2 Sharpe, I will then take that to the distribution that we have built out over the last 5 years, because RCM set up, just to rewind, set up a WFI in China in 2018. Myself and one of the co-founders of RCM spent collectively about 2.5 months in China in 2018-19. The consultant that I referenced got deported and moved back to China in 2018, so expedited our plans. He still works with us today. He's become a dear friend. He also works one of the large SOEs. He's been a great resource. What separates what RCM has done from our peers is we have not tried to go at this alone. We have partnered with local mainland consultants, local PFMs, MOMs, a lot of acronyms here. The custodians in mainland China, yes, I could work with the likes of Goldman Sachs or UBS. They're in China. I have chosen to work with Nanhua, Huitai, Guotai Junan, CITIC, CICC. These are custodians that are set up in Hong Kong, custodians in the US, where the FCMs that are set up in mainland China. These are
but Matt, let me ask you. Yeah, sorry to interrupt. So let me ask you, but why, right? If you're an offshore allocator coming into China, you have trusted brand names who do have access to China. So these are the bulge brackets, the Goldmans, the Macquaries, etc. Why would you work with onshore? What's the advantage of working with onshore teams where the market is a bit more nascent? Are they up to standard? Is it a pricing difference? Is it an execution? What type of edge or advantages do you have? Conceptually, I understand. Working with consultants on the ground gives you insight into the market in a way. But assuming that you have the same market data, I would imagine a lot of offshore allocators would prefer to work with global institutions.
Yeah, we always do things unconventional, swim against. We don't do it the easy way. Like I remember when I was backpacking around Australia, I met a lot of other travelers. They don't like Americans. We try to do it our way, and that's not what RCM has done. We have got input from mainland local experts and aligned interests with them where, what we are doing with these partners, joint venture people that we collaborate is they're finding capital for the alpha that we're providing. So our interests are aligned. They want Western alpha. They want RCM, who is well known in the West dealing with CTAs, finding talented managers and helping bring them to mainland China. Now, what I think we've done differently as well is trying to plug holes in terms of where this could fail. The biggest failure point after spending some time and meeting with a bunch of technology firms, clearing firms, traders, potential capital sources was the execution. So before China, RCM did and still does operate a 24-hour execution desk to support our US and European hedge fund clients. So we have a proprietary OMS that supports those clients. We actually wrote our technology, and this wasn't overnight, it took several quarters, to 4 native ISVs. So what does that mean? We control the execution. We have an audit trail. We have written to CTP, Rohan, JES, Hengshen. What that enables
and these
us
are CTP, Rohan, these are onshore connectivity protocols that are different from offshore, I gather, is that right?
Yeah, for the CTAs specifically, we're able to receive trade files, whether that be from Bloomberg Chat, they can email, they can send us a CSV. We have risk protocols in place to prevent like fat finger. Some of the mandates when investors allocate, there's concentration limits. We protect the investor, the manager, RCM. Again, it's all about everyone's interest being aligned. And to some extent, we're protecting the intellectual property of the alpha provider as well, because they're facing off with RCM, a trusted partner that they probably do business with already outside of China, as opposed to sending a trade file to a complete stranger in China. So it's worked for us. We've made every mistake imaginable. We only make the same mistake once and we learn though. It's been fits and starts. And my takeaway after spending a couple months there, Alvin, in 18 and 19, is one of the allocators that I still do business with who actually sent my wife and I a wedding gift. Again, I'd become friends with these investors over years and years. He said, yeah, China is long capital and short alpha. That was not the case in the United States market in 2018-19 when we started down this path. So it's been real pleasant. It wasn't an overnight success. I'm just thinking of the feedback I get from investors, and why I spoke about backpacking around Australia is foreigners don't necessarily like Americans because we always try to do it all right. Like after we went back a third or fourth time, people were like, wow, these guys are real. After we hired mainland local consultants, after we hired legal in China, compliance people in China, regulatory people in China, like we have a long-term vision because RCM China believes there's a massive opportunity in China for both investors and traders over the next several years.